Well, first of all, thank you, David. Thank you, Anka. You guys have been such great supporters of me, Jeff, Market Gauge in general. So I appreciate the invite today. My understanding is that I really didn't need to prep anything, that people would be asking questions. So am I to assume that I'm going to see the chat, or are you guys going to tell me what's happening in terms of charts requests?
Uh, yeah, do you see the chat window?
I
Someone just put
don't. I
something
had
in.
it before, but now it seems to have completely disappeared. Wait, hold on. Where'd it go?
If you find the Zoom,
Oh, there we go. The chat.
yeah,
Okay, hold on. Show chat.
there's two symbols in there now.
All right, hold on. Show chat. You know what? Oh, there it is. Okay, so I'm going to move this over here so that I can see it better. Oh wow, so people are already asking for symbols. That's great. But before I do that, I'm assuming I have a half an hour here and I'll have plenty of time to get to everything. I just want people to understand a couple of things about this market that it has made this less than a surprise that we're at where we're at, especially given the fact that NVIDIA supposedly was going to save the market and didn't. And very much I'm about this four chart screen. And so as a result, I could see things sometimes before they even evolve into the regular market. Happens to be granny retail, but let me just put up a new video to show you what I mean. So this is a daily, and I have the standard 50-day moving average. Hold on, I'll blow this up for a second so you can see it. The 50-day, the 200 down here. Oh, yeah. This is the 10, the cyan line. Then we also have calendar ranges that reset every 6 months. This is the 6-month calendar range that goes back from July. Will reset in January, and the 6-month calendar range high. Underneath that, in the daily, we have our momentum indicator, and then, of course, my volume indicator here on a daily. And so that's kind of like probably the thing I refer to most, but I also refer to the weekly charts, the 50-week, the 200-week. This is a 17-week exponential and a 43-week exponential. But this is the thing that I find is sort of my secret sauce here, is this is a monthly chart, and I use a 23-month and an 80-month. And so as a result of that, I also have these Bollinger Bands that I've put in. And what's amazing about these Bollinger Bands is that when we get a monthly close above them, we often see an acceleration of the trend. But the following month, and it didn't happen just today, when you start to see that Bollinger Band break, often that's telling you it's the top of the move. May not necessarily be the time to go short or liquidate, but then you start looking at the signs from both the weekly chart and the daily chart. So if we're looking at NVIDIA, what can we say? This already clued us that once it made its high and started to reverse, and the high of this month was 211, that was something to be wary of. 199, as you can see right here, is where the Bollinger Band came in. It showed you right here. Here's the blue. So once it broke 199, and today, even more importantly, could not get through 199, that gave us some kind of a pause. The daily showed you that we were breaking down now back under the 50, which we tried to get through it yesterday, and now certainly coming back below it. And the one good thing is that we haven't quite broken this very fast 17-week exponential moving average. So what we could say right now is this is still looking like a potential correction, but could turn into something much more is if this breaks down for a second day under the 50 and then starts taking out that July high, which will very much correspond with this exponential moving average. So I just wanted to show you. And then finally, what you see here is this is my 30-minute chart. I also use 1-minute charts for trading. But my 30-minute chart I particularly like because I like to see the pivots. S1, S2, S3 on the downside, the floor trader pivot being the gray, the midpoint, and then R1, R2, R3. And what's also interesting is, look, this thing gapped up, couldn't take out not only the 30-minute opening range, but also couldn't take out R3, and then started selling off and never really has had any kind of a substantial bounce. Now it's under S1. If this really breaks down under S2, that would be another clue. So when you ask me questions about charts, I just want to show you that I'm going to look at it from a very big point of view, not just one simple chart with a MACD or any of the other things. I actually don't even use MACD. I think I have found this and my phases, knowledge of phases, to be extremely important. I'm going to tell you before we get started is that I base a lot of my analysis on my economic modern family. This would be the retail sector, the small caps, the biotechs, semiconductors, transportation, and regional banks. And we could see trouble in paradise with the consumer breaking down. The Russell's still doing okay. Obviously, we saw this massive move in IBB, but if you look back, 170 was pretty good resistance. And now here we are with the semiconductors. Let's move that to current information. And we had the reversal this week when it made a new high and then closed below the low of that week. The next week, it looked like we were going to be heading into more of a correction anyway. So all of this kind of makes sense. Transportation now is hovering on the 50-week, which is significant. It broke down under the 50-day, but hasn't been under the 50-week since, we had that big move down March and April. So the question is are we heading into something like an April move? I'd say it's possible, breaking down here too, and even in the regional bank space. So I kind of wanted to give you that, right? So you had that. So now, Kumar, is that for me to look at HD and UPS, and then we can kind of move on from there? All right, so let's do it. So Home Depot, yeah, had terrible earnings, and this is really all a reflection of what's ailing the market that seemed to be kind of in the back burner until what we're seeing now, which is the Fed may not lower rates, although I'm kind of hoping that they will, not because of the market, but because I think they need to. And B, that we started to see a souring of AI, not necessarily the bubble that people are calling for, but from an investment standpoint, not necessarily chasing the market up here. And again, we saw the classic with NVIDIA showing you that nobody really wants to be a buyer over 195, even with all the analyst upgrade. So this is really a reflection of everything that's going on right now. People are not going out and buying things to either build homes, we know that, but also even to remodel their homes. That was a big down part of their sales coming in less. So a couple of really interesting things here. We look out, let's zoom out. So let's start with the monthly chart. So remember I showed you with the monthly chart, I like to look at the Bollinger Band. Look, this is so classic, right? So this is exactly what I'm talking about. It happened twice. It cleared here in December of 2021. The next month, which was January 2022. So we had every signal under the sun probably crashing at that point. The January calendar range low, the 50-day moving average. But first it started with it not being able to sustain this wonderful Bollinger Band. Then we got through it. It's gotten choppy here. And now all of a sudden, once again, we went through it, couldn't get through it again. We went through it and couldn't get through it again. So this was really, to me, the key signal. Now, the other thing is it's been up and down around the 23-month. And the reason why I like the 23-month is because it really tells you, oops, I'm going the wrong way here. It really tells you about 2-year business cycles. We broke down under the 2-year business cycle this past month. So are we going into a recession? If you want to use this as some kind of barometer, right now, this is the 80-month. This is about a 5 to 6-year business cycle. The thing that will save this market is if this can hold 311. But now that we're seeing a contraction in that whole Home Depot and everything it represents with the consumer space, this is something to keep an eye on. As far as the weekly chart, look at this. Right now, we're breaking the 200-week moving average. We already broke down under the 50-week. And on the actual daily chart, a couple of things. Number one is you broke down under all the moving averages. You could see the 50 started to slope negative. Now the 200 is sloped negative. We're below the July range high and the July range low with this gap. So the only thing that I would say is we are kind of close to this low right here. So the low right here was at 326. The low right now is 332 as of today, right? If for some reason, and this is my momentum indicator, and you can see the momentum indicator is showing tremendous weakness, but if we go back to that low, by the way, it was actually stronger here than it was here. That tells me this won't hold. But if for some reason that 326 holds, We get a mean reversion, which means these red dots will come back through the Bollinger Band. We're having an inside day. And with any kind of volume, we take out this high of 341. Maybe you could take a stab at thinking that it's got some juice to it. So I hope that was answered your question. We go to UPS now. Again, it's so important to look at all the time frames, right? Because you get one idea and then you have to look at it from the perspective of the monthly chart first. This broke down on the 23-month back in 2022 when they started upping the interest rates, right? When the market had the big crash. Only this rally that we've had over the last year till last couple of days, and of course in April, this really has not participated. This is the transportation space. This is extremely important. I showed you IYT sitting right on, that's the ETF for transportation, that 50-week. This is telling you that maybe this holds 80 on a monthly basis. But in terms of a business cycle, not only are we below the 23-month business cycle, but we broke down under the 80-month. So we could say that this is indicating that there is a huge contraction in terms of how goods are being delivered by UPS, number one, it may be a company issue, and number two, in the overall space, that people are buying less. And so I would say right now, the biggest hope is it clears 80. This is November. And maybe if it closes out the month above last month, which was October, 157, maybe from a long-term standpoint, I think there's going to be a rally. We're above the exponential moving average on the 17-week, but we are below it on the 43-week and certainly below it on the 50-week. However, this hold here sort of corresponds with our 80 number, and it could be a little bit of a flag. So that's something to look at. And from the daily perspective, what's really interesting is this is what we call a bullish divergence in momentum. Here's the 50 above the 200 in momentum. So the momentum is actually in a bullish phase, while this is actually in a distribution phase. When the 50 is under the 200 and the price is under the 200 above the 50, we call that distribution. If it breaks down under the 50, that would be bearish. So what we can say is if this is telling us anything, that the momentum is more bullish than the price action, again, you want to look for some confirmation. And to me, the smartest and most conservative, since Norm called me conservative, would be to wait for that about 100 to 101. And look how that corresponds with a move back over the 200, back over the July calendar range. And then, of course, your risk would probably be to around 95 or so. You'd want to use that 10-day moving average. So does that make sense? Okay, let's look at SQQ.
Video files.
So this is invert. Yeah, this is the inverted, right? Interesting that you want to look at this instead of Qs, but okay. I usually would look at the underlying and not the inverted one myself, but we'll do this since you asked. All right, let me see if I can get this monthly chart going. I mean, clearly, you know, this has been in a trend that has essentially been going nowhere because the Qs have been the massive leader of the markets for a long time now. Okay, I can't even get where we go. Oh, here we go. We're starting to see light at the end of the tunnel here. Look how much I had to spread this out because it's had such a narrow monthly range forever. Now, we have the 23-month. So obviously this has not been in a good trend. It's been only in a downtrend. We have some support down here in the Bollinger Band on the red side. I haven't really shown you much on the red side, but that was like at 30. That was your rock bottom. And so what this is really showing me is, other than the fact that it was extremely oversold, you can see here on the RSI, it's only at 56 on a monthly basis. Over 97 becomes overbought. So this thing probably went down to below 3. Let's take a look at the other parts now. The weekly chart. We haven't crossed anything significant yet on the weekly chart, right? We need to cross at least the 17-week moving average, which looks like it would be above today's high at 80.32. So, or this week's high, I should say. So keep that number in mind. We're trading a little bit under it right now. So we still have to say more correction than, you know what? This thing is ready to turn around and NASDAQ is going to crash. However, we do have this big bar today that is clearing the 50-day moving average, just as this is clearing the 50-day moving average as well. Actually, this had a bullish divergence because look how this crossed the 50 in momentum before the price did. Now, of course, what I like is that this is approaching the 200-day. Look where the 200-day is. So I would say if you wanted to sum that out, I would probably look for that exponential moving average to clear on the weekly close, which would be tomorrow. We get a close over 80.30. That would not only now take out the exponential to the upside, but it would also confirm, well, it looked like we weren't going to confirm. We've already confirmed what we call the recuperation phase. So yeah, look at this resistance you have here. I wouldn't buy it into it today, but I would certainly think tomorrow, any move over that might be worth a shot, but I'd be nimble. I would probably not stay with this if it took out this low right here, which would be 73. And it's got a big ATR, $4.25. So, it's a mover. Okay, sorry, you may have to ask them not to speak in the background. Oh, yeah, guys, can you lower your voices? People are getting distracted by your voices. Okay, thank you. Thank you for letting me know that in such a polite way, Kumar. I just asked them. Okay, turn, TERN. Okay, let's go here. Pharmaceutical. Okay, well, the pharmaceutical space has been the hottest space. And I don't know how many of you know me, but I've been on the media talking about this for quite some time. This looks like this might have been some kind of a FDA news. I'm not sure. You don't usually see these kind of massive moves in a pharmaceutical unless it has an FDA approval or something like this. So you had a little bit of help from the fundamental side. I mean, what would I do with 3 big days up like this? Most likely nothing, right? This is not my kind of trade, but let's see where I can give you some suggestion. Well, number one is that same Bollinger Band on the monthly. Look, it's coming in at 1625. You get any move like that closer back down to around 1625. Especially as we end the month, which is in another week, and it holds. But look how overbought we are. I showed you what oversold looked like with blue. This is the RSI of 99.95, and it's red. This would not be the time to get in. Now, I don't know if you're interested in going long or going short. Maybe you want to tell me, Mike, I'm assuming your name is, but yeah. Otherwise, to me, I would wait for a $10 dip to see if it held, if this is a company that's really got some legs going forward in the pharmaceutical space. See if we had any clues. Well, we did have a couple of clues before the FDA announcement. And again, I'm going to assume it was something like that, in that this started to break out over the 50-day moving average, the momentum. So it was kind of showing you that the momentum was hanging on to the 50 just as the price was. That's not a divergence. That was just confirmation that the price and the momentum were moving together. If you were lucky, you would have gotten in before this gap up. If not, obviously, after this gap, you probably would have either bought it on this day or waited for the confirmation the next day. So there's that 16 area right here. That's where I think it could go. Okay, let's move on because I'm getting a lot of questions on a lot of charts, which I'm so happy to see. Marvel Technology. Okay. Yeah, well, this kind of is mirroring the whole tech space, right? Having a lot of trouble here. So let's start with the monthly again, because I find if I really want to understand the broad strokes of how this is moving from an economic standpoint, are we in contraction or expansion? We can see that this thing has been all over the place, right? You had that massive move in the beginning of January, and then it broke down under the 23-month. But since it's cleared it, which was 2 months ago, what's happening right now is we're starting to test that 23-month again. So just from a technical standpoint, if we close the month underneath this, really the low of this month, which was 77, and it's trading around there right now, you might expect a little bit more of a down move. How much more of a down move? Let's go to some of the shorter term charts. If we look at the weekly chart, this has just crashed through everything, the 50-week, the 17-week exponential, the 43-week exponential. So when I say how much more of a crash, I would probably be looking at the 200-week moving average as possible support here. So right here, I don't think I would touch it. Where would I say, okay, coast is clear? Let's go to the daily chart. Well, we're still floundering around the 6-month calendar range high. We're under the 50, obviously. Here's your 200, which, by the way, has a negative slope. I would say that at this point, maybe we'd have to get through the 50 and the 10-day moving average. And if I'm just looking at some of the resistance that we've had here recently, I would probably not feel good about getting into this unless it took out 88. So between now, so 88 and above, good. Under 77, I think you can expect a move. Maybe it stops a little bit here at the July low 70. But otherwise, then you might see that move, like I said, down closer to the 200, which would be about 64, 200 week, that is. ALNT, Alliant. Okay, better shape, but the same thing I showed you with NVIDIA, right? Is we are below that monthly Bollinger Band after clearing it for 1, 2, 3 months. So it's kind of a key reversal right here. However, we're still just in correction mode because we haven't taken out these exponential at 46.77. And if we look here at the daily chart, we are definitely breaking the 50 today. And it will be the first time we've been below the 50 since back here in October. So again, I would take a cautious stance unless we cannot get a second day close under the 50. And if we can't get a second day close under the 50 and tomorrow it holds back, let's say over 50, the number 50, not the 50-day moving average, then maybe I would say you have a really tight risk to try this from the upside, except for one little caveat here, is while this is breaking down under the 50, look when this broke down under the 50 in momentum. It broke down here when it was still well above the 50. I love this real motion indicator. I'm not here to sell you anything by any means, but I will tell you if you're interested in any of these things, we have them at Market Gauging. You can ask and I can put you in touch with the person who can tell you more. But this, I can't tell you how many times has saved me from buying highs and selling lows. Once this broke down under the 50, even though the price was all the way up here, it started to break down under the 10. Now we're finally getting the break under the 50. And look at this. Now we're getting to test the 200. And if the 200 in momentum breaks, look where the momentum, where the 200-day moving average is. Again, all the signs right now are pointing to a little bit of a cautious environment. Oh, who's Sunny? Hi, Sunny. Sweet. Yes, I remember you. Hi. Okay, long-term and short-term thirds on gold and silver. Let me just do one more. Well, actually, you know what, Kumar, you asked me so many. Let me do something that somebody else asked for on gold and silver because, my God, I can certainly talk and it's been a while. So let me show you gold from the GLD standpoint because I don't have all these fancy indicators on my bar chart, which would show you the futures. I'm very madly bullish in gold still. But does that mean I think it could take this kind of parabolic move right now? Not necessarily, but I wouldn't be too concerned about gold. And in fact, you know what? Let me quickly show you because I actually set it up where I had a feeling I might be showing the metals. The gold is holding the 50-day moving average. Yes, we had a nice little reversal here where it made a new high and then you had that massive sell-off the next day. And of course, we haven't really been able to match that price. But what I see, unless we break down under this 50, so that would be like 39.90. And even then, if it got anywhere near 37 or 3,600, I think that would be the gift. But if it doesn't, we want to look this over 4,200 right now. So this to me, with the market melting down to a degree, that could turn into something worse. With the dollar stronger and the talk of the Fed doing nothing, gold is still holding really well. I would call this a consolidation. And again, if you wanted to be less conservative, maybe I would wait for a close over 4,100 in the futures, add to over 4,200. What I like even better, and we'll go back to the SLV, but what I like even better than gold is the silver market. Even though silver is getting a little bit of a hit today. If we take a look at the silver, we have the same kind of thing. We're pretty far from the 50-day moving average, which comes at around 48 cents. We did make the new high and have the reversal. But I think if we can get back down here, that would probably be a good probe. If we don't get back down here, where would I start thinking, oh my God, it's time to buy? I would say that would be a close over 52. And of course, if we get through here, the recent high, which is 54.40, and by the way, this is the December contract, then so it's spot. I would say that this would be the reason why silver is going to go up to $75 or $85 an ounce. The last thing I would show you here is what I'm all about, which is this gold to silver ratio. So right now, we can't break 78. If we do, if the ratio breaks 78, which means gold will be trading 78 times the price of silver and then less, that would be a huge bullish sign for both gold and silver, but mostly silver. If we get back through 81, I probably would say that maybe gold holds up better than silver for now. But again, that's where I would watch my consolidation. And right now, we're sort of in chop zone. So this may not necessarily be the best place to get in. Either buy it on a little bit more strength or buy it on more weakness. If we go now to my chart of GLD, that would translate. Let's look at the monthly. You know how much I love these monthly Bollinger Bands. Look at gold. It's above it. However, the Bollinger Band comes in at, oh, I can't really see it. Looks like somewhere around 370. So if we get a close under 370 as we end this month, I would take that probably as a little bit of a sign, at least of caution. You can see it's happened before, and all it did was go sideways. But look what happened when it actually finally took out that Bollinger Band. Even though it was up and down, that's really that parabolic move. So that's the best advice I can give you right there. In silver, we're under the 10. Well, let's look at the momentum, right? We're back. Well, look how well we are, by the way, over that momentum, that Bollinger Band, I'm sorry, at 43.22. We've had 3 months close above it. This isn't an uptrend. I really am not listening to anybody who's bearish. They think any little down move in the metals means that the move is over. This is not how commodities work. They don't end peacefully. They go up violently and they end just as violently. And it looked like we were starting to do that, but it recaptured itself right away. And with all the hoopla that's going on in the market, this thing is really only down about 1% on the day. So let's take a look finally, and this will be the last thing I say about gold and silver because we'll have 2 minutes left. But let's look at my momentum indicators. So the one thing that will make me a little more cautious, and I'm long, but I have a profit. I've already took some off at 48, by the way. I have a no loss stop now. That's the way I'm going to do this. I'm going to play this with a no loss stop. If for some reason, because look at this, momentum is breaking down under the 50, here's your 50. Remember, I showed you that before with one of the other things you wanted me to look at, which was Alient. That broke down under the 50 before the price did. I pay attention to that. The only thing is it's happened before and it popped right back. So I'm going to keep an eye on this. I'm going to keep my no loss stop. However, we get back up, especially on the cash price 52, then I would say it's probably time to go long again. Do I have any other commodity that anybody wants me to look at? Since I'm kind of a commodity queen. Oh, you know what? I think I'm out of time, right? It's 1:29 Mountain Time.